Monetary Policy Committee Decision Day. The meeting started yesterday. Today we expect to hear the decision for the month of July, and of course we know top on the list of consideration would be inflation, and we've seen inflation react to global factors, but companies or bodies like the CPPE would warn us that inflation in Nigeria is not demand-based but structurally based. Whichever way, the CBN, the monetary policy of the CBN, has the responsibility to take all of this into consideration and give a fair price to the country that would affect borrowing, that would affect the value of the naira and all of that. So just as they are meeting and we are waiting the announcement, let's find out some of the things we may expect this morning. And we're doing it with Dumebi Oluwale. She is a manager research at financial derivatives company. Dumebi, good morning. Welcome to the program.
Good morning, Ini. Thank you for having me.
Great. So FDC expects that the rates will be kept at 26.50.
Yes, we very much so believe that. And I do believe that the reasons are very obvious. Starting first with the current trend of inflation. So while inflation, marginally declined in June just to 15.91%, what that tells us really is that pressures are still very much potent in the Nigerian economy, and a lot more work still needs to be done to kind of tame inflationary pressures. More importantly, when you look at the composition of inflation, we see that food inflation was still high, and that's extremely important when you consider the current drivers of food inflation in Nigeria today, which primarily is insecurity, and of course insecurity leading to lower food supply, and with lower food supply leading to higher prices. There are other aspects to this, but I think that with the food inflation dynamic, that's the major driving factor. And it's extremely important because it's not within the purview of the monetary policy, committee or even the central bank to address insecurity that is affecting food supply. However, it is their job to preempt the possible increase in inflation due to food supply shortages, and I think that that's where a huge focus would be, or a major consideration.
So that's why you have a lot of individuals, people like the CPP CEO, Dr. Muda Yusuf, saying that perhaps it's not just about the interest rate, because at the heart driving inflation in Nigeria, structural issues, not necessarily demand pull. So if we keep working at interest rates, do you think that perhaps we will get the results that we desire when, or assuming that the major cause of inflation is actually structural?
I think we can always look at this in two ways, right? There are two policy coordinating bodies, in every economy. There's the fiscal side, there's the monetary side. Now, on the monetary side, there are limited tools through which the central bank can actually ensure that inflationary pressures are, tamed across the economy. And the biggest tool at their disposal is interest rates. Now, not because a lot of times interest rate adjustments will significantly tame price pressures immediately, but because there is a transmission network through which it happens. So when the interest rate is adjusted, or the CRR is adjusted, or money market indicators are adjusted, what that does is that it signals to other indicators, and it signals to the broader economy that the central bank is doing what it needs to do to adjust and ensure that price pressures do not escalate. The second thing here is forward guidance, right? So the central bank is doing this to consistently communicate to the broader market to ensure that sentiments do not spiral. And the reason why this is extremely important is because there's such a thing as inflation expectations. If people believe today that inflation will increase tomorrow, increase in the next 6 months, and increase in the next 12 months, that thinking will influence their decisions today, their buying decisions today. And I believe that that's something as well that the central bank is putting into consideration as they adjust interest rates. Again, the mandate of the central bank is price stability, and they only will be able to do this with the tools at their disposal, which I strongly believe that the central bank has been doing, because unanchored inflation expectations as worse as inflation spiraling. But I also think that it significantly increases the pressure and the need for fiscal authorities to do what needs to be done to ensure that the structural drivers of inflation that we have today are significantly addressed. And again, like I said, at the top of this list is insecurity. It cascades, because when we think about agricultural productivity, which indeed is the true way to reduce inflationary pressures, the input materials or the input sources to ensure that there's enough food supply, people are struggling with it. Farmers are struggling with it simply because they are unable to plant, they're unable to harvest, they're unable to produce, and then it spirals down. Then you also add the aspects of transportation costs and storage facilities, all of which significantly impact food inflation. But again, like I mentioned, the biggest driver right now is insecurity, and not until we see fiscal authorities move the needle in that regard significantly, I guess these conversations will still keep happening.
Yeah, unfortunately. And I mean, almost every day we do hear of kidnapping. And yes, we hear the parts of kidnapped victims being rescued. But I mean, when you talk about perception, once you have that news, it's really difficult to change the color of
Yeah.
investors when you hear kidnapping. So, I mean, once we have, assuming that we have this hold position, does it change anything? Are we just going to continue at the rate at which we are? Any change expected?
I mean, not so much change, but I think what it does is that it just cools the markets, right? We wouldn't likely see any swings in investor behavior, because this is the expected decision that the central bank is likely to take. I think a few other things that will support this decision making is, number one, we've seen a resurgence, right, in tensions between the US and Iran, and this domestically means that we would likely see an increase in petrol prices, because global oil prices are higher, and the CBN is of course trying to hedge against that. I think another thing to consider is global interest rate movements as well, right? The markets would definitely consider how the US Fed is adjusting monetary policy, and also the Bank of England, which we have seen held rates last month, and the expectation will be that central banks domestically and even regionally across Africa would likely do the same thing, so that the appetite for emerging market assets would remain strong, which I think would likely be the case for Nigeria, especially with portfolio inflows. And of course, I think the final thing to consider here is the fact that we're now seeing a possible increase in pressures on the naira. Reason being that, number one, Dangote is reverting to FX pricing for petrol, and of course other energy products. And the second is that election spending is likely to peak in the coming months. These two factors will put pressure on the FX, and as well as put pressure on the naira. So that chain reaction, I do believe that a whole decision will somewhat temper the market expectations on how this could likely impact inflationary pressures in Nigeria.
What about commodity prices, domestic commodities?
I think that for me would still largely depend on the structural factors which you've been, really speaking about today. The fact that we would likely see an increase in petrol prices over the coming weeks means that transportation costs are likely to increase, and of course, this means that distribution costs would also increase, further impacting food prices, which are likely to stay high. there's also the fact that, again, I think insecurity, I cannot, emphasize this enough. The fact that supply constraints remain, this of course means that, supply shortages will continue to, negatively impact the broader commodities market and would likely see prices rise. I guess another factor is, the flooding incident that we've seen as, the rainy season continues. That in itself is another, supply shock that would likely, affect food prices and keep prices high in the next couple of months. So I do think that the stable prices that we've seen over the last couple of weeks, I think that that's likely going to change over the next months. And of course, we know what that means for the broader economy.
So is it true that people are already stocking up for Christmas because of election disruptions expected, among other things?
Well, not so much. It is happening for people that have the means to do so. But when you look at the composition of the consumer market in Nigeria, not everyone has the ability to do so. They think about it, but then they're unable to make such forward-looking decisions because of how much prices have significantly increased and how their wages have not caught up over the last couple of years to meet up with those significant price increases. However, on the flip side, what we are seeing is that businesses and suppliers are actually making the move to stock up inventory, ahead of the election period. So they're taking up they're making a lot of bulk purchases now. We're seeing an increase in new orders, seeing an increase in inventory purchases and stock ups just ahead of the election season picking up, and of course the festive season. So we're seeing Christmas in July, really.
So early, but thank you so much to
Yes.
maybe Oluwole for that. A lot of people, I believe, would have loved to do that, but wishes are not horses, unfortunately. Manager Research at Financial Derivatives Company, thank you to maybe Oluwole.
Thank you for having me.
Let's take a break now. When we come back, we'll be talking about scaling for development through the telecoms. That's our next conversation. Please stay with us.